My name is Gabriel Brent, and I am the trader and the developer of the Appzone system. And what we're going to be talking about is actionable things that you can do in your trading to actively identify price reversals. Okay, but before we get into all that, realize that with trading, there is substantial risk of loss. You can read our disclaimers on our website. And really what we're going to be talking about here today is just the bare bones of understanding the bars and understanding price action. Now, I'm going to make some assumptions with everybody here that you are actively pursuing trading in some endeavor. And just out of curiosity, how many people here are looking at day trading and swing trading? If you want to put that in the little chat box, that would be absolutely awesome. What type of style of trading do you guys do? Futures, Forex? All the above? Are you guys looking into ETF trading at all? All that kind of good stuff. Futures, stocks, yep. Okay, cool, cool. All right, good deal. So now, how many people here are familiar with the ideas and the premises of just trading price action or just trading these bars? Actually, let's rephrase that a little bit. How many people here are comfortable with just the bars on your screen? Nothing else, just reading price action for price action's sake. Everybody comfortable with reading the bars? Or does it seem a little daunting? You know, we've got a lot of price movement up and down. There's what's going to happen next? I don't know. You know, are all those emotions and feelings going through your mind as you're looking at this blank chart here? I see a few yeses, so that's a good sign that we have some people that read price action here. All right, good deal. So for the rest of you, let's talk about these bars a little bit. Now, I have got to say that I've been listening to some of the other presenters through the presentation, and I think it really is true. Price action is key, and understanding these bars as they move up and down is super duper important. And that's really where I started from in my trading journey, was understanding what do these bars tell us, you know, understanding the symphony that is actually playing out before us as both buyers and sellers wage war in the pits, you know, for whatever financial instrument that you have going on, whether it's futures, stocks, Forex, it doesn't really matter, you know. The financial instrument is it is one of those things that when we look at price action moving over time, we just want to make sure that there's enough volume, enough participants moving so that we're not waiting for positions to play out over weeks, but we can actually get involved in the market. Now, personally speaking, I do a lot of day trading and swing trading. Okay, and I love the 2 hours a day type of idea because that's what I do. I really only day trade about 2 hours a day, and then I move into swing trading and doing other things throughout my day. So how do we take advantage of the most important thing, which is price, and telling when price is doing something very, very important? And I think what is super duper important in all of this is understanding that the market moves in waves. And I'm sure that you've probably heard this before or seen this on the chart yourself, but the market tends to move in waves, back and forth, back and wave. And if you guys are familiar with like sine waves, you can see how they move back and forth over time. All right. So how do we take advantage of this simple idea of price moving in waves? And we could talk about trend. We could talk about fundamental news. We could talk about earnings reports, all kinds of things that could be affecting the market at any one time. And there's so many different participants. We could talk about hedge funds and robots and automated trading and high frequency trading and banks and institutions and governments. There's so many different participants in our markets. But what it comes down to is price. And as we look at these waves going on in our market, we need to be able to get an edge, okay? So what I'm going to share with you is what I found to be very, very helpful, okay? Now, I'm going to share with you something that I think is just absolutely fantastic when it comes to reading price action. And it is the simplest pattern because in most circumstances, and excuse these blue lines here, these are just some of the stuff that I was doing for my own trading earlier on. Basically, as the price is moving along in its wave pattern, what a lot of people try to do is to pick the exact top, like where is price going to stop? Right here, okay? And I think that gets a lot of people into trouble because, I don't know, maybe prices done this in the past and they're reading price action and they're like, okay, well, price is going to stop right here, and they're looking at support and resistance. They're looking at all kinds of good things that are going on here and reading the price movements. But to pick that one exact one exact top tick is really, really hard, okay? And what I prefer to do in the wave theory analysis, okay, is not try to really pick that one so much, but it's to run with the big market makers, okay, to run with the big institutions. So let them pick wherever the top and the bottom is. I'm just going to jump on board as price continues on in its direction, okay? So I refer to this a lot of times as just buying and selling the pullbacks in the direction of trend, okay? That's what I call this, all right? It's just these simple little pullbacks. Let's say that the overall trend is down, and there you go, all right? So it's not trying to grab that one, but it's just trying to jump on board at a very easy and risk limiting type of area, okay? Now, we could get into a whole bunch of statistics about this and things of that nature and statistics of trading, but we're going to get into something that you can take from this presentation today and you can actually start applying on the bars in 10 minutes, okay? That's the idea behind it, all right? So first off, I am going to start off with the open here of this market, all right? And we are going to say that the market opened right here, all right? This blue line is when this market particularly opened, all right? Now, what is special about the open? Well, we are looking at a daily session point, okay? So when does the quote-unquote market open? When do the active traders get involved? When does that session start? Because in this particular example, this is on futures. We can also do it on Forex and stocks, and we'll get to that here in a couple more of the examples. But for futures, let's just start at when the market opens, all right? Now, from that opening point, what we're going to be looking for is the wave theory idea, okay? We're going to be looking for price to oscillate at the extremes, all right, or at the peak of the sine wave, all right? So if we see this initial kick down here, like we did this morning on this market, what we're going to be looking for is a simple little price pattern, okay? We're going to be looking for a new high. All right, if we're looking for it to the short side, all right, or a new low, if we're looking to it from the long side, all right? And these new lows and new highs as price moves along, these are called pivots. And I know that you've probably heard about these before in some of the other presentations, and I think these are really, really important as well. Okay, so once we identify a new high or a new low, now we don't know that any one of these spots are going to be a pivot on the right side of your chart. So as we're coming along here, you know, we can only see this much. We don't know if that high point is really going to be a substantial new high, okay? But at this point now, things are starting to tell us a little bit of a different song, okay? So what we're actually looking for, and I'm just going to fast forward over to this example here, okay? Just because I know that this one happens to be a new high. What we're going to be looking for is what I call price action failure. Now, being a programmer, all right, being a programmer, I need things to be very logical. I think it's too easy, and I see this way too much in the financial industry as a broad whole, of people being very kind of general, okay? I need things very, very specific. I need this rule written out like this, and it needs to apply this way every single time. It needs to be very, very logical, okay? So what I have found is this little pattern here. Once we see a new candle high, all right, I'm looking for the first green bar to retest this new candle high, all right? Same can be true for the low. So, but let's just do the high pattern first. Okay, so we have red candle, red candle, red candle. Pretty soon here, there's going to be a green candle or something that I call a little doji. Now, you'll have to pardon my charts because my candles are not green and red. They are actually transparent and red. It's just part of the coloring system that we're doing here at Apazones. It's more brand relevant kind of thing. So we have red candle, red candle, red candle, and now we have a doji candle, all right? So this is important to me. This doji candle or green candle represents, in my mind, a retest of this high, okay? This candle is pushing to see if this high point is really going to stick or not, all right? Now, the next candle that comes along is a traditional green candle. And again, this candle is super duper small. These two candles combined represent the retest of that high, and therefore the lowest point in between this first, we'll say, green candle and that high, we want to record where that point is, all right? Now, what we're doing here in the grand scheme of things is we are trying to identify if this is the pullback area, all right? Is this the highest point here or not? That's what we're trying to do, all right? Now, in just a couple bars, we will find out whether or not price closes below this candle here, all right? So as far as an exact pattern goes, what we're looking for is a red candle to close below this line in the sand, if you will, okay? And what I want to do is I want to put my stop, okay? I want to say that I think the market's going to go down after price goes below this candle and closes there. Now, with these bars, just so that you know what I mean by closing, and I saw that a whole bunch of you guys were already reading price action, so I think that's really, really cool. If you guys are looking, if you're not familiar with reading the candle bars, a red candle is formed basically from the open of the candle being higher than the close of the candle, all right? So we're looking for another red candle to form here, and sure enough, that red candle formed, all right? So I'm going to be looking at putting my stop at this point here, all right? And then we're going to be looking Now this is just my personal preference. If I know that this is how much max risk I could be taking, and this is the Y value on here is the important thing. I'm looking at the Y value to say, hey, this is 8 ticks of risk, or this is like 8 cents of risk, okay? If I'm going to be looking at a risk of 8 cents, then I want to have my profit target at least make 8 cents of profit, okay? And then we can also look for maybe a 2-to-1 ratio, so I'd be looking at making double my money, 16 cents, all right? And if I look at 16 cents from where this candle closes, I find myself right down there next to the lowest point that I see since my open here, okay? So, given this information entering at the close of this candle, all right, so not on this bar, but on this little red bar here, okay? We get the next candle in formation, and you can see that it closed at right around the same spot. I would be wanting to jump in somewhere right around in here, okay, on this candle, and I would be looking for that 8-cent move to the downside, all right? So next candle forms, it's a green candle. Let's just see what happens if we get this or not. Yep, and we sure do a few bars later. All right, so the thing works all the way to the downside. Okay, now we've demonstrated one that works. All right, let's go look at these previous low ones. All right, and we're just gonna do this basic concept of what I call the price action failure here. Okay, or PAF. All right, so in my mind, this is a logic gate, all right, because, well, excuse the term gate, I'm getting all techie on you guys, but what happens in this is we are looking at a logical sequence of steps to say when is price going to form a pivot point, and we're able to jump on as those pivot points basically form. Okay, so we have a new low. We have a red candle that retests this low right away. All right. Yes, I sure can, actually. All right, so let me make this a little bit bigger here for you guys. So we have a red candle, or we have a new low down here. Okay, we have a red candle that immediately retests this. Now, usually when I see a red candle that immediately retests a new low, I forego that candle, and that's the way the logic of this works. So then we're looking at green candle, green candle, green candle, green candle, red candle. Okay, so this red candle here is the first bar that I'm saying is going to retest this low. All right, so the line in the sand is going to go from the highest point. It's the highest point in between this red candle and this candle here. All right, now that's the line in the sand point. Now what I'm looking for is for price to close above this candle within a certain period of time, because I too like to trade with momentum, which means I like to see a lot of price action happening fast. I want to know that I'm in a good position with the big boys, and the big boys are supporting my position, and I'm not doing something that they're not fully engaged in, and they're not fully behind, because I need their permission to trade just as much as I need my own personal permission to trade too, okay? So if this does not happen, if price does not close above this point within a certain number of bars, we're just gonna say 5 bars, then I'm not interested in this position, okay? I'm not interested in this new low. Even though it made a new low down there, it's probably not something that I wanna be involved in, okay? And basically, we can do this for every single new high or new low. Now, in order to grab the true reversals of the session, this new high and this new low have to be the new high or the new low of your session point, okay? So this stuff doesn't really matter, Okay, these new pivot highs don't matter in here, and we really did the analysis on the one that worked. All right, so now this is a futures example. Let's go off and let's go look at a example here on Apple. So this just happened on Apple just a few minutes ago, and I think this is pretty cool. I was recording this, or I was just looking at this as everything was going down. But here's what's going on in Apple right now. All right, so remember that line in the sand idea that I was telling you guys about just a little bit ago? Well, I actually automated that. Being the developer that I am, I was like, man, this pattern works out really, really well every single time. So if you guys are interested in the automation, we'll give you guys links for all that here in just a little bit. So here's the line in the sand. There's the red line in the sand right now, okay? Price closed below it on this red candle here. So putting my entry on this red bar right after price closed below the red line in the sand, okay? The entry would be on this candle here. And it looks like, depending on where you're getting in at, it looks like we're going to be taking about, let's just say 12 ticks or so, 12 to 14 ticks of risk on this trade, all right, or cents, all right? We're taking 10 or 12 ticks or cents. Basically, all of that a tick is it's the lowest price amount that a financial instrument can move at any period of time. So like you can see that we're moving like 1 cent at a time on this particular one. Futures may vary a little bit. Forex varies a little bit on that minimum tick size, but it's all the basic same idea. Now, the other thing to note is that here's our session open over here, all right? And from the session open over here on Apple, we did have a new low all the way down here, but look at this one. Here's the line in the sand that the software automatically plots for us, just like what we're going through, but price did not close above that point, all right? Price didn't close above it within those 5 bars that I was telling you guys about. Instead, it just slowly meandered its way up to the point. But this one, this is a good signal because price closed below that red line in a certain number of bars, and we have a defined risk right here, which is just that high in between when this line goes in place and the pivot high that's up there right there. All right, so we're looking at the potential big reversal of the day here on Apple right now. All right, so for my first target, I would be looking for a 1-to-1. If I'm risking 14 ticks, I want to make 14 ticks, and then multiples thereof, okay? So if you're using multiple contracts, or if you're just using one contract, I would probably look for a little bit more than that. Probably be looking more for like a 2-to-1 risk to reward ratio, just because well, this isn't really a talk about money management so much, but we'll just say 2-to-1 risk reward ratio. And you can kind of see what's going on there, and Apple's about to give us that 2-to-1 risk reward ratio right now from the really good reversal signal that it did give us today. All right, so it works on Apple, it works on CL or crude oil futures. Let's go check out a foreign exchange market. I like to watch a lot of the pound markets, just personally speaking. All right, so here is the latest and greatest on the pound yen right now. All right, so on the pound yen, we have possibly a new pivot high that we could be looking at, and price and the software, the price action failure, just plotted a new red line here. Okay, so this one looks like it's going to fail unless this bar, maybe the next bar, we'll see where the next bar starts to plot. But unless price forms below this in real time here and closes below this point, then this would not be a valid signal. All right. However, if it does, then we could actually take this to the short side, and let's just say that it closes right here, okay? Let's just say that this bar hurries up and closes down there. All right, what do we do for our risk? Well, our risk would be from this next bar that plots, it would be all the way up there to the highest point in between that high and where we'd be and the high of wherever this line started to plot from, okay? In this case, it's forming off of this bar. So our stop would be there, and it looks like we'd be taking about 15 ticks of risk. Therefore, I'd want to be playing out my first target to 15 ticks of risk right there, okay? So it's super duper easy. Now, mind you, this has to be the overall high of the day or the overall low of the day, all right? It's got to be a new high or a new low. And that's pretty much the way that I play this type of reversal pattern, all right? So as we look at all the price action here, we could have played some of this stuff a little bit earlier. The only one that it seems to have worked on, well, let's just play since the session closed, okay, from yesterday. Now, as we were going along here, look at how many of these ones that just fail, all right? So we have a brand new high in this market. The red line goes in place right there. Price never closes below it, right? So that's a no-go, right? We have price going below this little red line here, but this is not a new high because it's a lower high from that high there, okay? So that's a no-go. But it's just this simple little pattern that repeats itself over and over again, all right? I could get into a lot more detail about what the software is doing and how that's relevant to a lot of the stuff. It's obviously not forming off of pivots. It's just a line in the sand type of indicator that works really well. So that's pretty much what I have to share with you guys as far as the overall idea with this type of approach that we're taking here. Now, you guys might have some questions as to what it's doing. I don't have any problem answering it. The cool thing is, because I am a programmer, I have gone on ahead and I have automated the process, okay? So over here on the website, you can check out our price action failure indicator here, all right? We have it available on all these different platforms. Again, this is just a simple way of basically playing the reversals of the day, all right? Now, for trend following, we have a few other ways of getting into this with trend follow approaches, but the price action failure indicator is definitely one of my favorite indicators. You can see the overview of it here on the page. I really enjoy this piece of software just because this helps me identify pivots almost before they even form, and also take those pivots in a really cool way, okay? There's another way to also trade these in correlation with the trend, okay? Because this setup right here, this is a reversal setup, but I found it to be very profitable, and you guys can take with it and run with it. You can also use the price action failure indicator in combination with the zone software that we have on the main web page there. The zone software is its own unique deal. Basically, what it does is it is a neural network that can scan a whole bunch of different markets. It tells us our trend direction, the minimum tick size. It also gives us confirmation setups of when price action is confirming levels at certain key areas, which are these zones that it automatically creates here. And when it does that, it will give us a little diamond here, and if you see a little R above it, that means the market conditions are ranging or chopping. You can see what level it's actually pulling off here on the right. So it's a really cool piece of software. Recommend you also check that out on the website. I know that I'm not going into much detail about that as well right now, but this particular reversal here on CL, the first one that we started off with today, very, very interesting price action because when we look at it in the grand scheme of things, we can identify this, and we did identify this as an area of high, okay? So we automatically knew that that was a high area of the day coming into the day, and potentially a really good shorting opportunity, okay? So that's the kind of stuff that I want to share with you guys here. Just another piece of speaking on the crude oil inventories, I don't know if you, or excuse me, crude oil market, if you actually apply the price action failure to this to the chart here, the Globex high actually had the beautiful little price closing below the red line right there. You put your stop just above that point right there, and she goes down. Okay, so I've been able to use this particular entry on a whole bunch of different instruments throughout time, and it works really, really well. With Apazones, we try to make things really transparent as to why price is doing what it is doing and understanding the context thereof. And understanding context is why this neural network is working the way that it does, and how it's able to identify shorting opportunities inside of the levels here, the way that it is. So anyway, hope that gives you a little bit of an insight as to our software, what we're doing here today. I mostly just make tools as time savers, and they do all the heavy lifting for me. Therefore, when we have scanners like this down here at the bottom, these are just scanning markets and giving me the important signals that I want to be paying attention to. Okay, this stuff actually will text you and email you alerts. So if you guys are swing traders and stuff like that, we do have those services available. Don't have time to really cover all of those details here. If you guys would like to learn about how to read the bars and about our no-nonsense approach to reading price action, you can check out our price action school of reading the bars. It is a 4-week class, okay? And basically what goes down in it is you watch videos, you do the homework, and you turn in homework to one of our trading coaches, all right? So that whole process takes a lot of time and energy and effort from our coaches and all that kind of good stuff. And plus it takes your time and effort to watch the videos, do the homework, and we want to make sure that you're getting these concepts, just like with the price action failure. We want to make sure that this stuff is really sinking in so that you will see the results in a short period of time, okay? So as we're going through the price action school, because it is so labor intensive, we only have a few more spots open for next month. But if you guys are interested in that, go ahead and you can order the product on the website. If our training program gets a little too big, or if there's too many of you that actually subscribe to it, we'll put you on the waiting list until next month, or until the following month after that. But we really want to make sure that everybody is getting a good solid understanding of why is price doing what it is doing. Because I can't tell you how many times I've heard something absolutely bad go down in some like financial news report, you know, a consumer price index goes down and the market goes up, you know, and you're like, wait a second, how is that working there? Okay, well, it works on very fundamental principles of support and resistance, supply and demand, price action, but we really need to understand what that means. So I recommend you check out the price action school and also this really cool price action failure indicator. You can check out our other software packages online. as well under the software packages link, but the price action failure indicator will definitely get you started in a very, very basic and awesome reversal setup if you guys like to look for those low risk, high reward type of opportunities. And look at what Apple just did right now. So I think that's pretty cool, spotting the top of the day here on Apple the way that it did. So thanks guys for joining me here today. I'm putting the link in our chat here, so hopefully everybody can get involved, and we will see you on the other side. I also want to thank Investor Inspiration for having me out today, and we will definitely be providing more educational opportunities for anybody that's interested in joining us. Just so you guys know, we do have a traders workshop coming up tomorrow morning. So Saturday morning, I think it's a good time to get in practice. So if you guys want to join us for that, we will be doing a introductory and workshop class tomorrow morning for those who want to come out and practice reading price action with us and really get an idea of context of the markets and how to read price action in context. So that's a list on our main website of all the different events that we're doing here. And we just want to thank you guys for joining us today, and we will see you next time.